So let's start the new chapter of audit and assurance. Until now, we have covered three chapters regarding audit and assurance. In first chapter, we discussed some terminologies relating to audit. We discussed who perform the audit, obviously auditor, where they come from. They come from any audit firm. And audit firm, along with audit also provide other types of services to the audit clients. I mean, they provide accountancy services, they provide advisory services, they provide taxation services, consultation services. So an audit firm can provide other services as well. In chapter 2, we have discussed as accounting is done as per accounting standard. I mean, accountant have to perform financial statements as per accounting standards. In the similar manner, auditor do everything as per standards. And those standards are called ISAs, International Standard on Auditing. Who issue those standards? How those standards can be issued, we have discussed in chapter 2. In previous week, in chapter 3, we have discussed about corporate governance that every listed company have to follow. So what is corporate governance? What are the rules of corporate governance? We have discussed in chapter 3. And as per corporate governance, there should be 4 types of board committees in the business. What are those board committees? Nomination committee, remuneration committee, audit committee, risk committee. We have already discussed in previous class. Also, we have covered some of the exam level questions from the it. So now we're going to discuss in this chapter about internal audit. There are 2 types of auditors. One is called external auditor. And this paper, Audit and Assurance, we will learn everything about external auditor except this chapter. There is another auditor called internal auditor. Who is that? What he do? We will learn in this chapter, except this chapter. In Audit and Assurance paper, everything we will learn about external auditor. Who is external auditor? External auditor is an external person, is not an employee of the organization. Where they come from? They come from audit firm. What is their responsibility? Their responsibility is to provide assurance on financial statements. Is to provide report or assurance on financial statements. External auditor need to check the financial statements of the company that are prepared by company directors. For whom? Mainly for shareholder. So how a shareholder will come to know whether those financial statements are accurate, true and fair or not? So shareholder appoint the external auditor. Who appoint the external auditor? Shareholder appoint the external auditor. And what is the role of external auditor? His role is to check the financial statements and then provide an audit report. In that audit report, he will express an opinion. I mean, he will provide an assurance whether financial statements give true and fair view or not, and are prepared according to accounting standard. And this purpose of external auditor we have already discussed in chapter 1. Now we're gonna discuss who is internal auditor. Internal auditor is an employee of the company. Who's internal auditor? Employee of company. Who appoint him? Appointed by company management. Why? According to corporate governance codes we have discussed, a company should implement internal control system in the business. Director should implement internal control system. Internal control system means they need to define some system, they need to define some policies, procedures that everybody have to follow within the organization. Why there should be internal control system? To prevent, detect fraud and errors. Not only director should implement internal control system, director should review internal control system, whether the control system is working effectively or not. And it is better for the company to review the internal control system. Company must have internal auditor. Mean what is his main role? Review the internal control system of the company. So who appointed the internal auditor? Company management. Why? The main role of internal auditor is to review the internal control system and report weaknesses to management. Not only he will report weaknesses to management with recommendation for, he will report weaknesses to management with recommendation for improvements. Mean he will recommend the man we can improve the internal control system, in how we can overcome those weaknesses, so that management can implement a strong, sound internal control system within the business. So internal auditor main role is to review the internal control system. On regular basis, he is reviewing internal control system. And if there are any weaknesses, he is highlighting for the management. Not only highlighting the weaknesses, he is also helping the management with recommendation how those weaknesses can be overcome. But except this review of internal control system, management can take help from internal auditor in so many other areas as well. What are those other areas? We will discuss later on. But his main duty is to review of internal control system, for which he is appointed. Okay. So let's discuss what are the main differences between internal and external auditor. Responsibility. External auditor is appointed by shareholder. So he is mainly responsible to shareholder of the company. Mean he will report to shareholder. While internal auditor is appointed by company management. So he is responsible for his work to company management. Scope of work. External auditor work is not restricted. Nobody can restrict the work of external auditor for audit purpose, for verification purpose. What he have to do, nobody can restrict him. He will define his scope of work by himself. Management will not be influencing his scope of work. While internal auditor is an employee of company working under the management. So his scope of work, who will define? Management will set his scope of work. Mean whether he is just there to review internal control system, or management need help from him in other areas as well. Mean what work he need to perform, who will define? Company management. And it is better from company management who should define? Non-executive directors audit committee, to maintain his independence. For external auditor, he must be an independent. Mean his work should not be influenced by management or any other third party. It is necessary for the external auditor, he should remain independent. How his independence is affected, how he can maintain independence, we will learn in next chapter 5. But independence is necessary for external auditor. Internal auditor, independence is necessary, but as he is working under the management, so his independence is very difficult to maintain. But for external auditor, he can maintain and he should be independent. Emphasis of work. External auditor main focus of work is to form opinion on the company financial statement. This is his main duty. While internal auditor main focus of work will be defined by the company management. Management will define what is your main duty? Either review of internal control system only, or there are some other areas where he can help the management. Qualification for external auditor, qualification is compulsory. He must be a member of any recognized supervisory body like ACCA, ICAW, Institute of Chartered Accountants in India, CPA. He must be qualified. And to become member of any body like ACCA, you need to pass certain papers, you need to pass ethical modules, and you need to complete 3-year work experience. Then you will become member of ACCA, mean recognized supervisory body. While for internal auditor, there is no qualification compulsory. It's on company management whether they can appoint internal auditor any qualified chartered accountant, any ACCA member, any part qualified person, any bachelor degree holder, master degree holder. It's on the management to whom they gonna appoint as internal auditor. So external auditor is responsible to shareholder, internal auditor to management. External auditor scope of work is unrestricted, while internal auditor scope of work management can restrict. External auditor must be independent, while internal auditor independence should be there, but he cannot maintain. Emphasis the work of external auditor is to report on the financial statements, while internal auditor will be defined by management. And qualification for external auditor is compulsory. He should be a member of any RSB, recognized supervisory body, but while for internal auditor, qualification is not compulsory. Sometimes companies establish their internal audit department within the business, mean appointing different persons to work in that department as internal auditor. Sometimes instead of establishing an internal audit department within the company take the services of internal auditor from external audit firms. Mean company is having a choice, either they can appoint a person as internal auditor, or they can take internal audit services, mean perform review of internal control system from whom? Any person from the outside company, mean from any external audit firm. But then won't they become employees because you are hiring? Obviously, they are not employing. Instead of employing, they are taking the service from outside. You're paying them. In that case, they will be just paying for the service. They are not having employee as internal auditor. If they are taking service of internal audit from outside external audit firm, so that will be called outsourcing of internal auditor. But doesn't that affect independence? We're gonna discuss now. What are the advantages of outsourcing? What are the disadvantages? So companies can outsource their internal audit department. If they just need to review internal control system and they don't have any expert person who can perform expert review, they can take internal audit services from any external audit firm. What are the advantages of outsourcing? Obviously, if a person coming from the external audit firm, he will be expert. He will be having a wide variety of industry experience. So readily expert will be available. If they are appointing internal auditor, they need to train him first how to perform the work. After some period, he will be expert and performing the work. So in case of outsourcing, company will be having a readily available expertise available. External will be independent because he is not working under pressure of management. He is coming from outside. So what could be the advantage? Service can be commissioned on flexible time scale. Obviously, when you need internal audit, you will call them. And obviously, if you are calling for some time, you will be paying less. Instead of paying 12 months to an employee, they are paying only for the services required. Mean it will be less costly. It will be cheap. The service can be provided by a team over a short span, long span, mean for how much time company need the internal auditor, company can arrange that. Staff will be readily available, no training is required because he is having experience of performing internal audit in different companies. Immediate internal audit function can be implemented. And if company is legally required to have internal audit department, so if they appoint people, obviously in recruitment of people, it will take time. In training of people, it will take time. Immediate internal audit function cannot be established. In outsourcing, you can immediately having the department. A model for permanent house department can be established. If suppose in future company want to establish internal department within the company and they don't know how to establish this department, first they can outsource the services, and through outsource internal auditor, they will able to learn how many persons we need, how they perform work, and then they can appoint their employee as internal auditor, mean they can establish their department. Mean they will get an idea about implementing internal audit department within the business. And the independence will be enhanced because he is external person. But there are some disadvantages. There are some disadvantages. If you are taking services from outside, you need to sign a contract with outsider. And in contract, you need to write down what he will perform and you will be paying for that. But in case you need more services from him, then in that case, you need to re-sign the contract. And in re-signing the contract, there will be negotiations involved. There will be more fees involved. There could be some clashes between internal auditor and management that can disturb the business. This could be the disadvantage. Audit staff may not be available when company requires. Obviously, when he is available, he will come at that time. If suppose there is any fraud happen in the business and you need immediate investigation team, if your internal auditor within the business, you can perform investigation quickly. But if it is outsourced, might be he is not available at that time. So staff availability issue can company need to face. The company may permanently lose specialist skill. Where are the specialist skill of internal audit? Not in your business, outside the business. Mean skills will not be within the business. And additional monitoring arrangement have to be implemented because if you are having employee within the business, then you can monitor his work on flexibility when you are free. But if they are coming from outside, you can monitor their work when they are available. In that time, might be you are also busy in some other tasks. So there could be monitoring issues as well. And obviously, if internal auditor is coming from outside, he may leak some of the confidential information of the business to any other competitor company if he is also working with competitor. So there could be confidentiality issue. Your internal staff will be loyal with the company. He will not disclose confidential information outside business, but through outsourced person, confidential information can be disclosed to outside, especially to competitors that can cause problem for the company. So there are some advantages of outsourcing and there are some disadvantages of outsourcing. For disadvantage, additional monitoring arrangement. First, contract containing terms of reference may be restricted, thus limiting the ability of internal audit services provided follow-up suspicion circumstances outside the agreed duties without requesting permission from the board renegotiating the contract. Mean if one person have a made contract with the internal auditor, they have agreed few things. That manager, if gone, a new manager might not be aware of what was in the contract, what we have negotiated with each other. So there could be a problem between management and auditor in case of contract is not properly designed. So in future, contractual duties could create problems. Okay, what else is in this chapter? We have discussed what internal auditor do, review of internal control system. Except internal control system review, internal auditor performs some other kind of services for the company as well. So we're going to discuss what are the activities of internal auditor, our role of internal auditor that he normally perform in a company. Activities of internal auditor. An internal auditor perform some reviews in the business. He performs some operational reviews in the business. And he performs some other assignments in the business as well. I'm going to discuss, just wait a moment. So internal auditor performs some internal reviews in the business, or simple reviews in the business, some operational reviews in the business. These are related to operation only, and perform some other assignments. What reviews internal auditor perform for the business? He perform for the business value for money review. He perform best value review. He perform IT review. That is also called IT audit. He perform financial review for the business. So internal auditor perform different reviews for the business: value for money, best value review, IT review, and financial audit. What is financial audit? Financial audit, not financial review, it's called financial audit. So financial audit is his main work. What is his main work? Review of internal control system, and report weaknesses to management. Not only weaknesses, with recommendation for improvements. For which corporate governance require there should be internal auditor in the company. So that is called financial audit, mean review of internal control system and reporting weaknesses to the management that we are aware of. What is meant by value for money review that internal auditor performs within the organization? Value for money review mean he assesses 3 E's of the business. What are 3 E's? Economy, efficiency, and effectiveness. Economy, efficiency, and effectiveness. What is meant by economy? Internal auditor will see whether business acquiring resources at lowest cost or not. What are the resources business acquiring? Material, labor, as well as a finance. So he will see whether business acquiring material at lowest cost, labor at lowest cost, and finance mean low rate interest, low interest rate loan or not. Mean if business is acquiring any loan, mean finance, he is acquiring at the low interest rate. This is mean by economy. Efficiency, internal auditor will see whether business is producing maximum output with minimum input or not. Mean business producing goods through minimum resources or not. By using minimum material, by using minimum labor hours, he is producing required level of output or not. If business is using less resources to produce required output, this means business is achieving efficiency. He will see effectiveness. Effectiveness means meeting objective. If there is any activity going on in the business, whether that activity objective is met or not, if objective is not met, this means the money has been wasted on that activity. So value for money review mean internal auditor will assess three E's: economy, business acquiring resources at lowest cost or not; efficiency, business producing maximum output with minimum input or not; and effectiveness, business meeting objectives or not. In simple word, he will see whatever the money business is spending, against that money business is achieving value, mean benefit or not. And business will achieve benefit in terms of efficiency, economy, as well as effectiveness. So this is called value for money review. In a business, internal auditor perform best value review. Best value review mean he will assess four C's. What are the four C's? Challenge, compare, consult, and compete. Challenge, compare, consult, compete. What he will see in challenge? He will see in challenge the reason and method. What does that mean? He will see whether business producing goods and services as per customer expectations or not. If customer expectation mean reason is a high quality, whether business method mean production processes are of a high quality production or not. If the reason mean customer expectation is low cost, low price, so whether business method mean production processes are of low price, low cost production or not. Mean whether business meeting customer requirement or not. Mean business method mean operations are as per reason mean customer expectation or not. He will compare business products with competitor products. Whether competitor products are better or our products are better than competitors or not. Because if our products are not according to competitor are not better, then who will be gaining customer? Who will be attracting customer? Competitor. This means we are not performing well. He will consult with the stakeholder of the business whether they are happy, satisfied with business product services or not, especially the customers. Because if stakeholders are not happy, business is not performing well. He will help the management in defining competition strategies of low price or high quality. Mean we can compete with the competitor, either the similar quality of competitor we can produce at low price, customer will be attracted, or the similar price we will charge for better quality than competitor, then customer will come to us. And if we need to compete with the competitor, what we need to do, either we need to offer low prices through lower cost, or we need to provide high quality at competitor price. Effectiveness is similar to this, but these are two separate kind of reviews. If he is performing value for money review, might be this review he is not performing. If he is performing this review, then might be no need for value for money review. It's not necessary he will do everything. No, these are the activities from where management can take help from. Exactly. He perform IT review, mean if business system is computerized, he will perform the IT review of that computer system. He will see whether the IT system is designed properly or not. Because if the IT system design is not proper, then the IT system will not be performing properly. He will see authorization control of IT system, mean only the authorized people with having a login ID and password is accessing the system or not, so that fraud errors relating to IT system can be avoided. He will perform a value for money review on IT system, in whether this IT system meet economy, mean acquired at lowest cost, whether this IT system is achieving efficiency, and whether this IT system is meeting its objective or not. If it's not meeting economy, efficiency, effectiveness, this means this IT system is not beneficial for the operation, is not providing benefit to the operation. So we will perform IT related review, whether the IT system is working appropriately. If management do not have enough time to review by themselves, they can ask, they can assign this task to internal auditor, monitor the IT system. So these are the reviews that internal auditor perform within the organization. Except these reviews, he perform operational review as well. There are some important operations of the business. What are the operations, important operations of the business? There is an operation mean department called procurement. Procurement mean purchase department, marketing department, treasury department. What is mean by treasury? What is mean by treasury? Finance, yes. Treasury, finance, as well as HR department, human resource department to control the employees. Internal auditor will see whether these business department mean main operations are working as per management policy or not. Because if they are not working as per management policy, this means business will not be able to achieve its objective. So management needs some person who can check these departments whether they are working as per management policy. Because if management policy is different and their policies are different, so business will not be achieving objective. So internal auditor perform value for money review, best value review, IT review, financial audit mean review of internal control system, as well as he perform operational review mean checking business operations whether they are working as per management policy or not. Except these, internal auditor also perform some other kind of assignments. You can know the details of just concept is enough, because in this paper we are not writing lines for these. These things will be examined in MCQs form. Except this, internal auditor perform some other assignments. What are other assignments? Ad hoc investigation. He perform external investigation. He helped the management in compliance with law and regulations as well as IAS, IFRS. He helped the management in performing or producing social and environmental reporting. What does it mean by ad hoc investigation? Ad hoc mean emergency temporary investigation, like a fraud investigation. If there is any fraud happen in the business, so that fraud need to be investigated on emergency basis, so that you can control these things for future. So company management can ask the internal auditor, please investigate the causes of the fraud. Please investigate who are the people that are involved in the fraud. And please recommend us how we can overcome these kind of fraud in future. So that ad hoc temporary investigation, emergency investigation, company management can take help from internal auditor. If there is a need to perform any external investigation, what is meant by external investigation? If suppose company want to acquire any other business, they are going to acquire any subsidiary. What are the advantages of acquiring that subsidiary? What could be the disadvantages of acquiring that subsidiary? Whether we should acquire that subsidiary or not, if we're gonna acquire, how much bid price we should offer, company can ask their internal auditor to perform this external review. And this review is also called due diligence review. External investigation means due diligence review. Due diligence review means checking the acquiring company or investee company, the benefits, the problem, and structure of it. Because normally company appoint internal auditor from any external auditor firm experience. And if any person is coming from external audit firm, they are having a wide variety of industry experience. So company can take help from him in so many areas if he is properly qualified, experienced person. Obviously, if you are going to appoint internal auditor for your help, you should go for expert person rather than any other person. Except this company can take help from internal auditor in compliance with law regulations as well as while preparing financial statements compliance with IAS, IFRS. If company is providing any social environmental responsibilities and they need to report on social and environmental responsibilities in their annual report as a CSR reporting, as a integrity reporting, so they can take help from internal auditor in checking where company have performed these responsibilities and how the CSR report can be produced. CSR reports mandatory. In some countries there is mandatory, but other optional. So these are the areas where company management can take help from the internal auditor. He performs some internal reviews, internal assignments. He performs operational review and he performs some other kind of assignments. This chapter 4, finish. There is nothing left in this chapter. There were 3 main topics. Difference between internal and external audit. Advantages, disadvantages of outsourcing of internal auditor. And different roles, different activities of internal auditor mean what he do in our company. So let's discuss 2, 3 questions from BPP kit regarding internal auditor. There's a question number 15. See this question number 15. The board of Tangerine company name, is considering establishing an internal audit function. Which of the following factors would be relevant in making this decision? It would help the audit committee to discharge its responsibilities for monitoring internal control. The board would no longer need to take responsibility for the prevention and detection of fraud and errors. The cost of establishing an internal audit function should be considered against the benefit gained. Internal auditor is not compulsory. If management can perform review of internal control system, there is no need to appoint an internal auditor. Obviously, they will see cost benefit analysis, because if there are more activities that they can perform from internal auditor, so then they can bear the cost. So option 3 is correct. What else? Option 1, obviously, internal auditor is there, so he will be monitoring internal control. If he is not there, audit committee have to perform this role. But management responsibility to prevent and detect the fraud and errors will always be there. It will not be reduced. Option B, 1 and 3. Let's have one more question. 29. 29. You are aware that SGCC is considering establishing an internal audit department. With which of the following activities should the internal audit function not be involved? I mean, which is not the function of internal auditor. Monitoring of management performance, reviewing adequacy of management information for decision-making purpose, taking responsibility for the implementation of a new sales ledger system. This is not his area. Assessing compliance with regulations relevant to SGCC, he will assess. So C is not his responsibility. Because say ledger system implementation, who will decide? IT department or company management, not the internal auditor. Obviously. 30. If SGCC board decide to establish an internal audit department, then it will also need to decide whether it will employ a member of staff directly or will outsource the department to an external firm, either internal or outsourced. You have found a list in your study notes of the advantages of outsourcing as compared with the advantages of employing staff directly. Obviously, disadvantages are advantages of internal. The list includes the following points. Greater availability of specialist industry skills as required. I mean, what we need to do, there are 4 points. For each consideration, indicate whether it relate to the employment of internal auditor by SGCC or to the outsourcing of the department. Greater availability of specialist industry skills are required. This is the advantage of outsource. Flexible regarding staff number in response to changing circumstances, outsourced. Elimination of direct training cost. Obviously, training will not be required because he will be trained, outsourced. Development of skill, increasing the human resource strength of the entity, employee. Obviously, if he is internal, obviously human resource will be more skilled. If he is outsourced, that skills are lacking within the organization. So let's move towards next chapter. Chapter 5, that is relating to professional ethics. Ethics. What does mean by ethics? Morals. Mr. Ethan, what is mean by ethics? Morals. What else? Online students. Walisa, what is mean by ethics?
So ethics means a set of rules and regulations which need to be followed
Set of
in
rules
the
and regulations
company,
that need to be followed. What else?
and you need to abide to the rules. They're
Abide to
basically
the
rules.
rules. Ethics mean values, morals, rules, behavior. Everything is right. But for us from now onward, ethics means acceptable behavior, not behavior, acceptable behavior. Being a professional, obviously, we are going to become professional. So, being a professional, our behavior should be ethically right, not wrong. What is right behavior, acceptable behavior? In a particular situation, In a particular society, our behavior should be acceptable, mean ethical right behavior. If it is not acceptable, it will be considered ethically wrong behavior. Like while walking in a street, we should not hit anybody. We should not laugh at anybody. Why? Because it is not acceptable. It is ethically wrong. We should not hit anybody. We should not laugh at anybody. But while sitting with friends, we laugh at each other. Even we hit each other. The behavior is the same. While walking on the street, it's not acceptable, ethical wrong. While sitting with friends, it is acceptable and ethically right. This means there are no hard and fast rule what is right, what is wrong. Being a professional, we need to decide whether in a particular situation our behavior is acceptable. This means this will be right. If it's not acceptable, we should avoid it because it is ethically wrong. So we need to show always acceptable behavior in a particular situation. Being a professional. And if you are not aware what is acceptable, what is not acceptable, ACCA has defined some codes of ethics for you that every ACCA student, ACCA member have to follow. What are those codes of ethics? There are 5 codes of ethics: integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. We can differentiate between right and wrong behavior by considering these 5 codes of ethics. But we are going to become accountant auditor after completing ACCA. Integrity means an accountant auditor should be honest, should be straightforward. They should not be associated, not be involved in passing false or misleading statements or wrong reports. We should always prefer true reporting. Otherwise, we are not abiding these integrity principles. So integrity means an accountant must be honest, must be straightforward. He must not be involved, associated with passing wrong statements or wrong reports. We should not sign the reports that we are aware are wrong. We should not sign the financial statements that we are aware they are misstated. Otherwise, integrity principle is compromised. Objectivity means the main focus of your work, the main focus should be on your work. Your work should not be influenced by any personal benefit or any pressure of other parties. Mean there shouldn't be any bias, there shouldn't be any conflict of interest or undue influence, mean pressure of others. If you are conducting audit, being external auditor, you need to maintain your independence. The focus, your main focus should be on your work providing independent opinion. There shouldn't be any personal interest involved. There shouldn't be any pressure or interest of other parties involved. If there is any pressure, there is any conflict of interest, you should resign from that work. You should not perform that work. Otherwise, you are not meeting the main objective of the work. Meanwhile, working, you have to focus on the main objective of the work. It should not be compromised due to bias, due to conflict of interest, or due to pressure. Professional competence and due care mean the work you are going to perform, you must have the knowledge, skills, and experience for that work. If you don't have the skills, knowledge, experience to perform the work, you should not start the work first. Acquire the knowledge, skill, experience, then start the work. Otherwise, you will not be performing the work with due care. Not only you should attain the knowledge, skill, experience, you have to maintain the knowledge, skill, experience. Mean you should be aware of new changes in accounting auditing standard as well. Even after completing ACCA, our knowledge will not be stopped. Knowledge gaining will continue even after completing the ACCA. If there are new changes in the accounting standard, auditing standard, we should be aware of this. How we can refresh our knowledge? We can refresh our knowledge through CPD. CPD stands for continuing professional development. Continuing professional development. Mean we need to refresh our knowledge by attending different seminars, different coaching classes, by reading different articles, so that we can perform work as per up-to-date knowledge. So integrity mean accountant auditor work should accountant auditor should be honest, straightforward, should not provide wrong reporting. Objectivity mean your work should not be influenced by any personal or any other party interest or pressure. And professional competence and due care mean you need to perform the work with due care. And for that, you must attain and maintain specific knowledge, skill, experience required for the work. Confidentiality means during audit, you are having access to client all records. You are having all the information of client business. So that confidential business you should possess with yourself. You should not disclose client confidential information for your personal advantage or any other party advantage. And if you are disclosing client confidential information to any other party, and due to that disclosure leak of information, your client suffer any loss, he can sue you for damages and you will be liable to pay his damages. That's why being a professional, we need to maintain the trust of our client on auditing profession. And if they are providing us access to accounting records, they are providing all the information to us. We need to maintain those information with ourselves. We should not use that information for our personal benefit or any other party benefit. Otherwise, we will not be maintaining client interest not only on us, on the auditing profession as well. Professional behavior mean being the auditor accountant, we need to behave professionally. What does mean by behave professionally? We need to work as per the law, regulation, as per the standards. So that if anybody asks why you perform that, we can prove this law, this standard asked us to perform this, so we perform this. If you are not working as per standard, as per law regulation, you will not be able to justify your position in case of any allegation. Behavior professional mean we should not charge exaggerated claims to our client. What are the exaggerated claims? In audit, we provide assurance rather than guarantee. So we shouldn't offer any guaranteed work. We should not say we will give you guarantee we will save your tax. No, we can save tax as per the rules. If there is no saving, there is a no saving. You cannot guarantee these subsidies. But auditor provide assurance rather than guarantee. So if in your advertisement you are saying we provide guarantee we will save tax, so this is not professional behavior. You are advertising we are the largest audit provider in the country. And you are having only 2 offices with 7 partners. With 2 offices, 7 partners, you could be largest on any island, but not on the country. So we should avoid these kind of false claims. And being a professional, We should not provide disparaging, against remarks to other professionals. We should avoid providing negative remarks against other professionals. We should not say we perform work better quality than other firms. Who are the other firms? ACCA. To whom you are providing negative remarks to your profession. So this is not professional behavior. We should avoid providing negative remarks about other professionals because it will provide discredit to the profession. So professional behavior means we should avoid any act that is providing discredit to the profession. We should work as per laws, as per standards. We should avoid disparaging remarks about others. We should avoid exaggerated claims. So, being a accountant auditor, we need to follow these principles. Let's discuss about confidentiality a little bit more. So, client confidential information we should not use or disclose for our personal benefit or for any other party benefit. But there are 5 exceptions where we can disclose client confidential information. There are some exceptions where we can disclose client confidential information. We can disclose client confidential information if a client has provided the permission. If our client has provided us permission, okay, you can disclose, no worries. We can disclose, but in that case, we need written permission from the client. Otherwise, in future, client might say, no, I haven't say you can disclose. We can disclose client information if it is required by law. Like there is a law for money laundering legislation. That money laundering legislation require if during audit, you being auditor have found your client is involved in money laundering. It is your legal duty. You need to perform the local regulatory body without informing the client. Because law is requiring, so we can disclose these money laundering issues if we found during audit to the regulatory body. If we are not reporting and afterward that money laundering has been disclosed and it was disclosed, you being auditor were aware of these things, you will also be involved in money laundering. You will be fined. Might be there could be imprisonment for auditor as well. We can disclose confidential information if it is required by the court. Court required. Where? Suppose our audit client is sued by any other party. There is a court case going on. And the court has ordered the auditor, you being auditor are having so much information about the company. So please provide us a statement as a witness whether this thing is like that are not true. And if court is requiring as a witness any information from the auditor cannot deny the court. He has to provide that information. So we can disclose client confidential information in case when client has provided us written permission. When that information is required by law, like in case of money laundering legislation, if that information is required by the court. If disclosing that information is in public interest. What is the public interest? Best for society. best of our society. Suppose we are auditing a client, and during audit, we have discovered our client is polluting the local river by disposing his dangerous chemical waste into the river. And through this, what's going on? Obviously, living things are affecting. Even the local population use the river water for their normal drinks. There is no law to highlight these issues. But being a professional, it is our ethical duty. If there is any act against the public interest, we need to highlight, we need to report to any local body, we need to whistleblow. What are the spelling of whistle? Histle, whistleblowing. What's the term whistleblowing? If you have found, you are aware of any act against the public interest, you need to highlight those things. It is our ethical duty being a professional. We can disclose client information if it is in best interest of the auditor. What's the auditor interest? We, being the auditor, are member of any body. Like we are member of ACCA. ACCA normally monitor our work, normally review our work. How they review? During audit, whatever we are working, we are performing, we need to document that work, we need to prepare working papers. How ACCA monitor our work? They will ask us, please submit your audit working paper to ACCA body. Through your working paper, we will be aware whether you are following standards, whether you are working properly or not. So if we are submitting our working paper to ACCA for quality control review, that will be called QCR. QCR stands for quality control review. This means in our audit working paper, all the information of client is there that we are providing to anybody. We are disclosing client information to anybody, to our body, but this is in auditor interest, we can disclose. If we are going to take audit of new client company and their previous auditor are not continuing audit, before accepting the audit of new client, we should ask the previous auditor why he is not continuing. And previous auditor have to provide us this information properly in detail why he is not continuing. He should help us whether we should continue audit or not if there was any problem with previous auditor. Now previous auditor is disclosing client information to us. He can disclose because this is in auditing profession. That asking reason behind leaving the audit from previous auditor, there is a term called obtaining professional clearance. No, company cannot sue. Obviously, we will not disclose that information to outer world. We will decide only whether we should continue accept audit or not. Otherwise, those reasons might be happen with us. We will also be leaving audit in future. So confidential information can be disclosed if it is permitted by the client in a written form, if it is required by the law in case of money laundering legislation, if it is required by the court, if to disclose as a whistleblower is in public interest, and if the disclosure is required for auditor professional interest, especially in QCR, are in professional clearance. Mean if law required or court required, here disclosures are mandatory. Mean we cannot deny. In other cases, disclosures are voluntary. It's on us whether we should disclose or not. But if law is requiring, court is requiring, it's mandatory. We should provide the information if there is any permission from the client or not. Okay. So being the auditor, we need to behave ethically, and how we can maintain our acceptable behavior. We can maintain by following 5 ACCA codes of ethics: integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. You will learn these 5 principles in next 4 more papers of ACCA. Even you have learned these principles in business and technology paper as well. These are also in audit paper. These will be in SBL paper. These will be in SBR paper. These will be in a advanced audit paper as well. Same, knowledge will be same. Okay, let's move forward. Now moving towards the main topic of this chapter. Facts on independence. Facts on independence. An auditor needs to maintain his independence throughout the audit. But there are some threats on his independence that he need to reduce on acceptable level or avoid. What are those threats? Under what circumstances those threat arises? How to overcome those threats? We're gonna discuss now. So auditor normally face 5 kind of threats on his independence. Auditor have to face self-interest threat. Not we are talking about external auditor. We are talking about external auditor. This paper is about audit. There could be some threats on management accountant as well, but not in that much detail as on auditor. Self-interest threat, self-review threat, advocacy threat, familiarity threat, and intimidation threat. Intimidation threat. And there will be a must question on this topic in your paper. Self-interest threat, self-review threat, advocacy threat, familiarity threat, and intimidation threat. Self-threat, interest threat arises when you are having any personal interest with the client. Like you are shareholder of the client business, you are employee of the client business, or you are having any business relations with the client business. If you are shareholder of any company, will you provide opinion against the company? No. Otherwise, company will be affected, your investment shareholding will be affected. If you are employee of any company or having any business relation with the company, will you provide opinion against the company? No, otherwise my job will be lost. My business relation will be affected. I will suffer losses due to having no business relation with this client. So in that case, you should not be part of the audit. you should not conduct the audit. If you are having personal relation with the client, because there is a self-interest threat that can affect your independence. Not only it is affecting your independence, it is affecting your objectivity as well. Your main objective is to provide unbiased opinion on the financial statements. But here you will be biased. Your work will be pressurized due to conflict of interest. Mean knowingly financial statements are not true. Might be you are saying financial statements give true and fair view, even your integrity will be affected. Self-review threat arises if you are the external auditor of a company and you are providing accountancy services to that client as well. This means you are preparing the financial statements and you are giving opinion on the financial statements. While performing audit, will you perform detailed audit procedure on financial statements? No. Mean you will not be working as per auditing standards. Your objectivity is affected. You will just review the financial statements. Okay, everything is okay because I have prepared myself. So this will be called self-review threat. And you won't even be able to find. Obviously. For listed audit clients, if your client is a listed company, you cannot provide audit and the tax and accountancy services. If your client is unlisted company, you can provide both services, but through Chinese walls. But through Chinese walls. What does that mean? Chinese walls. Chinese walls means separate staff for audit and separate staff for non-audit mean accountancy services. To listed audit client, you cannot provide audit as well as accountancy both. For unlisted, you can provide, but through Chinese walls, i.e. separate staff for audit, separate staff for accountancy services. Otherwise, there is a self-review threat that can affect independence of the auditor. Meanwhile, explaining the threat, we need to link with it is affecting independence of the auditor. Because there might be a question where you need to write down the answers. Instead of MCQs from this topic, there could be a question where you need to write down what is the threat and how you should manage that threat. Or is it computer based? It's a computer based. Obviously, you writing means typing in the word format. Advocacy threat arises when you are promoting the client as an advocate. Where you are promoting? In case of share issue, you are promoting the client. In case of a bank loan obtaining against bank, you are representing the client. In case of any court issue, you are representing the client. In case of any tax issue, mean tax dispute, you are representing the client. Mean when you are representing the clients against share issue, mean to shareholder investors, against a bank for obtaining loan for the company, against a court resolving any issue in the court case, or against tax authorities to resolving any tax dispute of the company. Whose these roles are? Auditor or company management? To represent a company against shareholder, against bank, against court, against tax dispute is the responsibility of company management, not the auditor. But it's your responsibility to express opinion on the financial statement. But if you are performing any of the function that is of company management level, it will create advocacy threat and will affect your independence. I mean, now you are representing the company. mean you are providing statements in favor of the company to the outer world. Tomorrow, you might hesitate to provide audit report against the company to maintain your repute. What people will say, yesterday he was representing the company and now he's providing opinion against the company. This can affect your interests. This can stop you to provide opinion against the company. So being auditor, we should avoid providing these kind of services to audit client. Is a fine. What is familiarity threat? Familiarity threat means if your close family member or a friend is involved in the client company and you are going to check his work, mean your family member, mean your father, mother, your brother is working as accountant, assistant accountant, chief accountant, finance manager, finance director in a client company. This means being an external auditor, you are going to check their work. Will you perform the detailed procedures? This will affect your work objectivity. You will not be highlighting their issues. Even you will over trust their work because they are your family member. In that case, this auditor should not be assigned to the audit who is having a relationship with the company, and other auditor should be assigned to the audit. This right. Intimidation threat arises when any party, client management, or any third party is providing fear or pressure to the auditor. There could be intimidation threat due to that fear, due to that pressure, you might hesitate to provide opinion against the company. If there is any fear or any pressure on auditor, auditor should resolve that pressure by discussing with audit committee. If that pressure is still unresolved, we should resign from audit. Otherwise, we will be forced to provide opinion wrong, mean our integrity will be affected. If there is any pressure, any fear, we should resolve that pressure, that fear by discussing with audit committee. If still unresolved, we should resign from. Let's take a break. After a break, we will discuss these threats in more detail. I mean, there are different examples, there are different situations where these threats arise, and we will discuss how to overcome these threats, and then we will move towards exam level questions. So take a break for 15 minutes. See the written ones.
on your point, how you use the first use the law. I'm thinking, yeah, I'm on. Are you thinking you just saw it? Yeah, it's actually my travel class. Oh, you didn't go to class before? You know, man. No, I just came to about it like 2 days ago. Ah, you came from overseas. No, no, no. So I stayed over here. I finished my third paper like last week. I took the exam last week. So no, so I did my first three papers outside, like not over here. I get it. On my own. Okay, good. Yeah. So for the remaining three, I got classes. So I heard about this place 2 days ago. Where if I go? Yes. Especially that being the. Okay. No, like other answering question like you have to type out. You just answer keys. So you have to. Is it hard? Some if you still remember your beat, you'll be easy. Basically like the law, because there's two law. There's law global and law UK. Depends which you take. Which one do you global? They each both you the same thing. You just theory papers. Okay.
So there are 5 types of threats on auditor independence that we need to reduce to an acceptable level. First, we need to try to reduce. If we are unable to reduce these threats, we should avoid. How we can avoid any threat? By not conducting the audit of this client, by not providing those services, either audit or other. Self-interest threat arises due to personal interest with the client. Personal interest means you are having any business relation with the client, or you are employee, officer, partner of the client. You should avoid auditing a client where you are having any personal relation. Otherwise, due to this personal interest, self-interest threat will be created that will affect your independence. Self-interest threat arises due to financial interest with the client. What is meant by financial interest with the client? If you are a shareholder of the client company, you are having financial interest. Being a shareholder, you want to see best profit. While being an auditor, you need to see true and fair profit. Like if client haven't recorded any of the expenses and have highlighted the profit, you will say, okay, mean you will not highlighting these issues. In your objectivity will be affected. So we should avoid auditing a client where we are having a financial interest. Financial interest arises due to indebtedness. If you are indebted to the client, like you have either received a loan or you have provided a loan to the client, or against loan you have provided guarantees. Yeah. Mean client have obtained loan and you have provided the guarantee. If client will not pay, I will pay, like you have associated yourself with client loan. In either you have received or provided loan to the client, or you have provided guarantees against loan. In that case, you are indebted to the client company. and this year financial interest can affect your audit objectivity. You should avoid auditing a client where you are indebted. Financial interest arises due to overdue fee. Due to overdue fee. What is this? Suppose previous year you performed the audit work and that fee has not been recovered yet. So that fee is called overdue fee. And if you start audit working this year as well, then the previous fee, current fee will be a bigger amount. That can affect your objectivity. You might hesitate to provide opinion against the client because if I will provide opinion against the client, both fee will not be recovered. So what we need to do in case of overdue fee, we should recover the previous fee first or resolve the matter relating to previous fee first, then we should start the next audit work. We should not work with the overdue fee, otherwise self-interest threat will be created that will affect our independence objectivity. Self-interest threat arise due to fee dependency. Due to fee dependency. What is fee dependency? If you are auditing a client and along with audit, you are also providing other non-audit services, though through separate teams. And if your total income, your firm's total income, 15% or more is generating from one client. So that is your major client. Means suppose this is our firm. We are having 3-4 different clients. We are receiving income from them in audit fee. If our total income, suppose our total income is $100,000. Out of this, our total 100,000 income, if one client, we are receiving 15% of total income. So that will be considered our major client, mean major source of income. In that case, there could arise fee dependency issues, self-interest threat will be created. We will not be providing opinion against this client because if we provide opinion against this client will not be there and our major part of income will not be there. So this can affect our objectivity, independence. And this normally happen where we are providing audit as well as non-audit services both. So what we need to do, we need to stop providing some of the non-audit services so that the fee from this client should remain below 15% of a firm's annual income. Because we charge audit fee annual basis because we conduct audit once in a year. So what is fee dependency? If a firm's total income's 15% is coming from one client, part of total income is 15% coming from one client. In that case, there will be fee dependency issues. And what we need to do, we need to stop providing some of the non-audit services so that the fee from this client should remain below 15% of the firm's total income. Suppose our firm is new. We are having only 2 clients. Then might be from one client, we are receiving 70% of our total income. In that case, we can justify the firm is new, clients are growing, so this will be reduced below automatically, below threshold automatically. In that case, it is justified. But if suppose our firm is old, and from one client, we are receiving 15% of our total income. So for 1 year, it is acceptable. We can justify it is temporary, current, not permanent. We will take steps in next year to reduce this. But for 2 consecutive years, it is not acceptable. It will create self-interest threat, will affect your independence. You have to stop providing some of the subsidies. In for 1 year is acceptable. Mean if 15% of your total income is coming from one client for 2 consecutive years, then there will be self-interest threat. Because for 1 year, it is acceptable. And if you are aware of this, you should start taking steps to reduce it below 15%. Otherwise, self-interest threat, not only self-interest, this will also create intimidation threat, mean will pressurize you. Because if I will lose this client, 15% of my income will lose. Because there are some situations where not only one threat, there are more than one threat arise. Self-interest threat arise due to personal interest, due to financial interest, due to financial fee dependency. Self-interest threat arises due to undue hospitality. What does that mean, undue hospitality? What is hospitality? What is hospitality?
Like gifts
Gifts.
and being welcoming. Being welcoming.
Like if we visit any client, they are offering cold drinks, they are offering any food, they are offering a coffee. So that will be called hospitality. Undue hospitality means significant hospitality. If being auditor, client is offering us significant hospitality, like client is providing us gifts, costly gift, client providing us their goods on discounted prices are free of cost. So that will also create self-interest threat. Because this will create some kind of mercy in our, like if client is caring for us too much, we should also show care for him. And due to this might be we will hesitate to provide opinion against this client. And this can affect our objectivity. We might not be that much critical that we should have been auditing this client. So what is hospitality? Significant hospitality is not acceptable. We should avoid significant hospitality. If it is trivial, trivial means unimportant, insignificant, that we can accept. Like if we are visiting the client, they are offering cold drinks, they are offering coffee, that is acceptable. But if they are inviting us on lavish high teas, lavish buffets, any kind of lavish entertainment, they are providing us high price gifts, they are offering us their goods on discounted or free of cost, that will be significant hospitality. That will not only create self-interest, this will also create a familiarity threat as well. Mean will create friendly relation with the client. So significant hospitality should be avoided. Self-interest threat arises due to contingent fee. Or percentage fee. What is this contingent or percentage fee? We are conducting audit of a client for so many years. And this year, at start of the audit, client has informed us, whatever my profit will be as compared to previous year, I will pay you that much percentage more fee as compared to previous year. Like if my profit will increase by 50%, I will increase your audit fee 50% as compared to previous year. If my profit will increase by 1000%, I will increase your audit fee 1000%. As the fee is decided? No. How much you will receive? It depends upon the future profit. Percentage fee. Contingent mean relating to future. And this will affect our objectivity. If client is not recording any expense, they are highlighting revenue, we will be happy because profit will be more, our reward fee will be more. So this will affect our objectivity. We being auditors should not work on percentage fee or contingent fee. The fee should always be fixed and predetermined, mean decided before starting the work. Otherwise, there could be self-interest as well as intimidation, mean our work will be pressurized due to fee. We should avoid working on contingent or percentage fee. The fee should be fixed and predetermined before starting the work. Self-interest threat arises due to conflict of interest. Due to conflict of interest. What does that mean? Suppose we are working on two different company, two different clients. One is client A and other is client B. Suppose this is Pepsi and other is Coke. We are auditor of both clients. During audit, we are aware that Pepsi has decided after 2 weeks, we will reduce our Pepsi price to half. Our audit staff is also working on Coke. They leaked this information to Coke and Coke have reduced their prices to half from next day. And through this confidentiality breach, who lose the market? Pepsi. Who informed the Coke Pepsi is going to do this? We. This means we are not caring about client. If we are auditor of both company, there could be confidentiality issue, mean information might be passed from this to this or this to this through our audit staff. In that case, we need to take some steps. If we are not taking those steps, we are working in self-interest. We are not focusing on best of the client. Just give me a moment, please. So what is conflict of interest? If we are auditing two different clients and they both are competitors, so there could be confidentiality breach issue between clients from our audit staff. So we need to take some steps. I mean, there is a self-interest threat. What we need to do? We need to create Chinese walls, mean separate staff for audit of Pepsi, separate staff for. These staff should be arranged from different offices. Separate staff, i.e. Chinese walls, staff from different office, not from one office. Otherwise, while sitting in office, they can disclose information with each other. And we need to sign a written agreement with our staff not to disclose information between client. But before this, we should take permission from the client. Mean inform them we are going to audit of both and we are resolving the confidentiality issue by these strong Chinese walls. If both company agree, we should continue both with these strong Chinese walls. If either of the client do not agree, no, you cannot do like this. Then we need to resign from one client and continue. Obviously, to whom we should continue, who is paying us more money. The decision will be on financial based. If there is conflict of interest, we are not informing the client or not taking these strong Chinese walls steps. This means we are working in self-interest. This can affect our independence. Like in future, client can pressurize us. You are leaking our confidential information over there. You didn't inform us. You didn't take any action. So how to resolve this conflict of interest? Conflict of interest arises if suppose we are auditing two client company. They are not competitors, but they are involved in some kind of litigation with each other. Even in that case, there could be confidentiality issue. They were two neighbors. One is a shoe shop, one is a clothing brand, and they are having any issue with each other. And there is court case going on for both, and we are the auditor of both. So there could be confidentiality issue. Why? Court can ask us to provide any information about any of the client being a witness. That case, we will not deny the court. So there will be conflict of interest. Even in that case, we need to inform both. If they agree, we need to create Chinese walls, staff from different offices, and written agreement with staff not to disclose information with each other. If either of the client disagree, we should resign from one and continue. Otherwise, there will be self-interest threat. Can you understand this? Self-interest threat will arise if we are having litigation with the client. Auditor is having litigation with the client regarding whatsoever matter. Might be previous audit report we expressed against the company, and now company have sued us. No, this was not the matter. Our financial statements were accurate. If we are having litigation with the client, there is a self-interest threat. Obviously, during current year audit, if we are working as an auditor as well, our critical nature will be invoked. There is a concept called professional skepticism. Professional skepticism. What does that mean? Being an auditor, we must be skeptic. Skeptic means we must be critical nature. We must be questioning mind. We should not over rely on the evidence that we have obtained. We should always seek for more and more evidence. We should be suspicious throughout the audit. If we are having litigation with a client, our professional skepticism will be very high because we're having litigation. Mean client is our enemy. So everything we will say it's wrong, it's wrong, it's wrong, it's wrong. In that case, even our objectivity will be affected due to personal interest. So what we need to do now, our client auditor relationship is finished. We should resign from the audit and we should resolve the court case. Otherwise, we'll be having very high professional skepticism, and that will also affect our objectivity. So we need to be professionally skeptic, but it doesn't mean we should be doubtful about client integrity. We should not rely over them. No. We should rely, but we need to be seeking more and more evidence from the audit. We should not rely on the evidence as obtained. So these are the examples that examiner will provide you in the question. So according to these examples, we will be able to highlight there is self-interest threat. And we have discussed how to reduce them or avoid them. Now moving towards what is meant by self-review threat. Self-review threat arises if you are providing accountancy services to audit client along with audit. In accountancy, you are preparing financial statements, and in audit, you gonna check those financial statements that are prepared by you. So you will not be performing detailed audit procedure, mean you will just perform review of the financial statement. Mean you will perform less procedure. Less procedure mean review. So for listed audit clients, we should not provide audit as well as accountancy. To unlisted, we can provide, but through Chinese walls. Self-review threat arises if to audit client we are providing taxation services. Mean we are preparing tax return for the client. Is tax return part of financial statement? Tax return part of financial statements? No. But there is a tax expense that is in the financial statements. So that we have calculated. And if we are conducting audit as well, will we perform detailed procedure on tax expense? No. We will be reviewing this only. So what we need to do, we need to create Chinese walls to reduce self-review threat. Allowed, but we need to create Chinese walls, means separate staff for audit, separate staff for taxation services. If we are providing asset valuation services to audit client. What is asset valuation? Suppose our client is constructing an asset and he is having no knowledge about IAS 16, what the cost to capitalize, what cost to create as revenue expenditure. But he need to prepare financial statements as per standard. So he took the services from us regarding asset valuation. And that asset value we have calculated will be reflected in the financial statements that we will be auditing afterward. So there will be self-review threat. How to reduce this? Separate staff for audit, separate staff for non-audit services. Self-review threat will arise if we are providing the internal audit services to the client as well as external audit. What internal auditor do? Review internal control system. How? By performing test of control. And being external auditor, we also need to perform test of control to check the control system, whether it is strong or weak. Because this control system is a strong, financial statements are true. If control system is weak, financial statements are not true. So if we are working as internal auditor, during external auditor, we will not be performing test of control, mean we will not be checking financial statements as per auditing standards. Who says we need to perform test of control? Auditing standards. And if we are not following the auditing standards, our objectivity is affected. So self-review threat arises. In some countries, especially Europe, some countries, it is prohibited that external auditors firm cannot provide internal audit services to the client. It is prohibited. But if there is no legal restriction, we can provide both services, but through Chinese walls. Separate team for audit, separate team for internal audit. Self-review threat arises due to secondment of staff to client. Who should prepare financial statements? Company management. How they prepare? Through accounting finance staff. Suppose company accountant left the company suddenly due to whatsoever reason. Companies having no other skilled staff to prepare financial statements, but they need to prepare. But they are having no staff. They requested us, please send one of your staff member to our company to perform this accountancy role. This means our staff is involved in preparing financial statements as well as auditing.
It's the same thing as.
Again, self-review that will arise. What we need to do? We need to create Chinese wall, separate team for audit, separate team for accountancy, like secondment of staff. Is that fine? So these could be the example in scenario where we can highlight, okay, due to this self-review threat will arise that will affect auditor, vendors, Chinese walls. In case of accountancy, prohibited for listed company. Advocacy threat arise if we are representing the client in issuing shares, in obtaining a loan, in a court issue, or in a tax dispute. And these are all function of client management level. Like client is going to issue shares to different investors, and you auditor is dealing with the share investors, representing the company. Instead of company management, you are representing the company to investors. If you are representing, obviously company repute will be high, auditor is in favor of the company. This means this company is good. So you should not perform these kind of services for audit client. If you have separate advisory department, then you can provide these services through Chinese walls. Mean these are called advisory services. Can be provided through separate advisory department staff, not through the same auditing members. Familiarity threat arises due to family relation with the business, with the client. Due to close friendly relation with the client. Not only family, close friendly relation as well. If auditor is having any family relation or close friendly relation with the client, this auditor should not be part of the audit, and other auditor should be sent to conduct the audit. Otherwise, auditor independence will be affected, familiarity threat will arise. So if you have changed the auditor, the other auditor who is going to conduct the audit is the colleague of the previous auditor that you have changed. Even due to colleague relationship, independence can be affected. So what we need to do, not only we should change the auditor, we should perform second partner review of audit working paper.
Audit is compulsory.
Audit working paper preparation is compulsory. These are as per our auditing standards we need to prepare.
Like whatever
auditor is doing, what procedure he has performed, what he has concluded, what are the results, it should be in written down form. So that you can justify your opinion in future. How you can justify your opinion? By showing working paper, I performed these are the results, based on this, I have provided this opinion. So if auditor have performed any work, and other partner should review his work, whether he has performed properly, whether he has checked the things properly, his independence is not compromised. There could be strong mitigation safeguard. This is the safeguard to reduce the threat. Familiarity threat arises due to long-standing relationship. Due to long-standing relationship. What does that mean? If your audit firm is conducting audit of one client for so long period, mean in previous so many years you were the auditor, you are also the auditor now. If in previous year you haven't found any issue while auditing, this means you have made your mind this client is very honest. There never ever any fraud error found. So this can reduce your professional skepticism. This can affect your professional skepticism. Meaning coming here might be you are not checking the things in more detail. Or if you are working on this client for so long a time, this will create a close friendly relation of audit staff member with client staff. So this can also affect the independence. In that case, we need to rotate of key audit personnel every 5 years. Who are key audit personnel? The key person on the audit, and those are audit manager and engagement partner. We have discussed in very first lecture, there are 4 kind of people in the audit team: engagement partner, audit manager, audit senior, and audit junior. Let's discuss again. In an audit team, who could be a part of audit team? In an audit team, there is engagement partner, audit manager, also called supervisor, audit senior, and audit junior. It is also called a trainee accountant. Who is audit junior? Who has just recently joined the audit firm, having no experience. He is on learning phase. He is not even qualified. I mean, might be his some paper of ACCA still left. Who is audit senior? Who is having more experience than junior? He know how to prepare financial statements. He know how to prepare tax return, and he knows how to perform audit procedures. But he's also unqualified. Either his experience is not completed yet, or some of the papers still left. Who is the audit manager? Who will supervise the audit? Even he is not a member of body. Might be he is having huge experience, 10-year experience, but couldn't complete the 30 papers. Because after completing 5 papers, he got married. And after marriage, in 3 years, he's having 5 kids. And he is spending his life with the family and finding no time for studying and completing the papers. Or through job, he is not finding time to attend the classes, studying and completing the remaining paper, but he's having 10-year experience of audit. So he will supervise the through his skills, experience. Who is engagement partner? The qualified person who has the authority to sign the audit report. Only member can sign the audit report. The person who is not a member of anybody, he cannot sign audit report. He could be manager, senior, junior, but could not sign the audit. All the audit work performed by these 3 people. Who? These 3. Like audit manager will take 1 senior along with 2 junior and ask them to audit the balance sheet items. He will take other senior along with 3 juniors and will ask them to audit income statement items. Whatever work they will perform, they will document, prepare working paper, and then we'll submit to manager. He will see whether they are performing work properly or not. At the end of audit, this person will decide what could be the opinion, either in favor or against. Then what he is doing, he will check the working paper before signing the audit report, whether all work has been completed, whether the opinion suggested by manager is okay or not, and then he signed out. And he is enjoying auditor. But now he is enjoying why? Passing all these three stages. So these two persons, engagement partner and auditor manager, they decide the audit opinion. They can influence the audit opinion. So if a firm is continuing audit for so many years against one client, there could be familiarity threat due to long-standing relationship. How we can resolve that? Rotation of key audit personnel every 5 years mean we need to remove these personnel from this audit and assign to other client audit, and other client auditor should be assigned. Senior junior, we don't need to change because they are keep changing. They are keep moving from one client to client because learning purpose. Familiarity threat also arises due to undue hospitality. So significant hospitality should be avoided. Intimidation threat arises if client management or any third party is providing any kind of a fear or pressure on the auditor. So auditor should resolve that fear or pressure by discussing with audit committee. If still unresolved, we should resign from the audit. We should not work under pressure. Pressure could be time pressure as well. If client management saying you need to complete audit within 1 month, no. For quality audit, we need at least 90 days after the year end. And if there is any time pressure due to which we are will unable to complete the audit, we will not be able to check the things properly as per standard. This means our objectivity is compromised. So we need to resolve this issue by discussing with audit committee. We need more time. If they are not allowing more time, we should resign from the audit. Otherwise, due to compromised work, our audit opinion could go wrong afterward because we haven't checked the things properly. And if we provide one wrong opinion, our whole life will be disturbed. Not only our auditing profession will be affected because public trust will be eliminated. If auditors are providing wrong opinion, then to whom we should rely? We might be paying damages to the shareholder if they made decision based on our wrong opinion.
Don't listen, companies have financial certain period of time.
That's why for quality audit, we need at least 90 days after the year end so that we can check things properly. Not only after the year end, we need some time before year end as well. Interim audit, that is called. So we have discussed the threats. We have discussed so many examples, scenarios, so that from exam question, we can at least identify these threats. Let's move towards our question. Chapter is not finished yet. Let's move towards the question. Okay, we are having this question. What we need to do? Identify and explain the relevance of any factor which may threaten the independence of dark company audit of North Sea company. We need to identify threats on independence. Briefly explain how each threat should be managed. Mean we need to provide at least safeguard how threat can be reduced or avoided. Can you identify any threats from this scenario by yourself first? Then we will discuss together. And threats. You are the audit manager in the audit of a dark and company. One of your audit client is a North Sea company, a company specializing in manufacturing and supply of sporting equipment. North Sea have been an audit client for 5 years. And you have been audit manager for the past 3 years. There is no issue being a manager, while the audit partner has remained unchanged. So as partner is working on this client continuously from last 5 years, so there could arise familiarity threat that can affect independence of the auditor. In next line, we will say the audit partner should be rotated off the audit and other auditor should have been assigned as partner to this client as per ACCA Codes of Ethics rotation every 5 years. So we can write 2 sentences. You are now planning the audit for the year ending 31st December 2009. Following the initial meeting with the directors of North Sea, you have obtained the following information. North Sea is attempting to obtain a listing on recognized stock exchange. The directors have established an audit committee as required by corporate governance regulation. Although no further action has been taken in this respect. Information on the listing is not yet public knowledge, so this is company issue, not our issue. There is no threat of auditor. You have been asked to continue to prepare company's financial statement as in previous year. And we are providing audit as well as accountancy services. It will create self-review threat, will affect independence of the auditor. As per ACCA Codes of Ethics, accountancy services to listed audit clients are prohibited, and this client is going to be listed in future. So we should stop providing accountancy services to this client being a listing company. As a company auditor, North Sea would like you and audit partner to attend an evening reception in a hotel. Attending evening reception. Significant hospitality that could create self-interest as well as familiarity threat. Will affect independence. We should avoid significant hospitality. Not inviting this invitation. If just attending, there is no dinner, lunch, or something, then it's fine. Mean avoid significant hospitality. Not avoiding this invitation. Where North Sea will represent their listing arrangement to bank and existing major shareholder. And if we are involved in representing to the company, there could arise advocacy threat that can affect independence of the auditor. Company is going to represent to banks and a shareholder. This means they are involving us along with them. North Sea, who is North Sea? North Sea is our client.
Yeah, North present.
North Sea will present. If we are going with management, this means we will also be involved in representing. There is no audit matter discussion. We can attend any of the meeting if there is any audit matter discussion. If they are going to represent to bank, to shareholder and taking us along with them, this means we are also involved in representation. Why they are taking us? To show that these are in our favor. These are with us. To enhance their repute. Advocacy threat. So we should stop providing these kind of representation to audit client. If we are having separate advisory department, we should provide through Chinese walls. North Sea has indicated that the fee for taxation services rendered in the year to December 2007, mean previous years, will be paid as soon as the taxation authorities have agreed the company tax liability. First, Audit with non-audit taxation services will create self-review threat. We should provide through separate staff and overdue fee. What is fee for 2007? Overdue fee will create self-interest that can affect independence of the auditor. Not only self-interest, it can intimidate, pressurize the audit work, current plus previous fee. So we should resolve previous fee before starting the next work. You have been advising North Sea regarding the legality of certain item as allowable for taxation purposes, and taxation authority is disputing these items. Mean you are representing the client in a tax dispute as well. This will also create advocacy threat. We can find threat at least now. Let's move towards some key questions. How examiner can test this chapter? Question number 5. Question number 5. The audit engagement partner has told you that the independence threat arising from YHT and company performing the review engagement should be monitored carefully. Along with audit, we are also providing some kind of review engagement like internal audit. Which of the following is likely to cause the audit engagement partner most concern regarding independence? Which will be of most concern? According to the ACCA Codes of Ethics and Conduct, YHT and company is prohibited from providing other assurance services to an audit client. Is that prohibited? No, only accountancy for listed audit clients is prohibited. Other we can provide it through Chinese law, so this is not of concern. Wrong statement. The review engagement is likely to give rise to self-review threat, as the outcome of the review could form the basis of the financial statement which the audit team will audit. The review could be of different type of review, might be value for money review, might be IT review, might be operational review. The lucrative nature of the review may make the external audit team less inclined to required management to make adjustment or to issue a modified audit opinion. Modified mean against client, for fear of losing the review engagement, because those review engagement are of a high price. Audit is of low price. So auditor in an audit might hesitate to provide opinion against the client, because if we provide opinion against the client, might be those high price review engagement will also be cancelled. So this can create self-interest as well as intimidation threat. What is 4? If the new review engagement causes YHT companies a fee income from BJM to exceed 15% of the firm's total fee, the ACCA Codes of Ethics and Conduct state that the new engagement must be turned down. No, for 1 year it is acceptable. For 2 consecutive years, if it is arises, then you can turn down either audit or review, not only review. You know. So option. Yeah. Next, moving towards questions 16, 17 to 22. There is a scenario. Okay, this scenario. The following scenario relate to question 16 to 20. Mean 4 or 5 MCQs will be asked from this scenario. And in past paper, examiner have tested this topic like this. There is a case scenario And there are 4-5 MCQs relating to scenario. They haven't tested this topic in a written form, but they can test either as a part of any other question or separate.
How many marks you gonna say here?
MCQs we will discuss. We will discuss today. The following scenario relate to question 16 to 21. You are the audit manager of Jones and Company and you are planning the audit of LV Phones Company, a listed company which has been an audit client for 4 years and specializing in manufacturing luxury mobile phone. So there is no issue as per 4 years. During the planning stage of the audit, you have obtained the following information. The employees of LV phone companies, who is LV phone companies, are client. Their employee are entitled to purchase smartphone at a discount of 10%. So every company provide discount to their employees on their product. There is no issue for us. The audit team has in previous year been offered the same level of staff discount. Then there is a problem. Undue hospitality, self-interest, as well as familiarity threat. And significant hospitality should be avoided. What could be the safeguard? But we don't need to write the safeguard. We should request the client not to provide this client discount to audit staff. We should instruct the audit team not to avail these kind of discount from audit client. We should request the client and instruct the audit staff. Order. But we cannot make order to client request. Please, it can affect our independence. During the year, the financial controller, finance department person who is involved in preparing financial statement of LV Phone was ill and hence unable to work. Company is finding difficulty in preparing financial statement. The company had no spare staff able to fulfill the role and hence a qualified auditor senior of Jones and Company audit firm was seconded to the client for 3 months to cover the work of the financial controller. Secondment of staff.
That's a different company.
No, LV Phone
Okay. Yeah.
is our client. Jones and Company is an audit firm. So self-review threat will arise. We should provide this staff if we want through Chinese walls. The audit engagement partner has recommended that the audit senior work on the audit as he has good knowledge of the client. No, there is self-review threat. If he is having good knowledge, it doesn't mean you can send him for accountancy and audit both. The fee income derived from LV Phones was boosted by this engagement and along with the audit and tax fee now accounts for 16% of firm's total fee. And previous year it was 15.7. This means it is going up by 15% threshold for 2 consecutive years. So there is a self-interest as well as intimidation threat. We should avoid providing some of the services to this client. From a review of the correspondence file, you note 60% of the last year audit fee is still outstanding. Overdue fee, self-interest threat, as well as intimidation. Previous fee should be recovered or resolved before starting the next work. Based on the information about, you have summarized some of the potential risk to independence in the audit of LV Phones as follows. Risk mean threat. Risk to independence mean threat on independence. There is a topic of audit risk that we will study in next chapter. So risk to independence are not audit risk. Risk to independence means threats on independence. So they have highlighted some points. The audit team has been offered a discount on luxury phone. Familiarity, self-interest. Audit senior was seconded to LV Phone, self-review threat. The fee dependency self-interest, intimidation. Fee are overdue, self-interest, intimidation. Question number 16. Which of the following option best identifies the valid potential threat to independence in the audit of LV phone and allocates the threat to the most appropriate category? I mean, out of these 1, 2, 3, 4, which are self-interest, which are self-review?
Yeah, see.
See, because only 2 is a self-review, other are all self-interest. Question number 17. You have also discovered that the audit engagement partner and finance director have known each other socially for many years. An engagement partner and company finance director having close friendly relation with each other. And in fact, went on holidays together last summer with their families to the finance director's villa. They are enjoying with the families as well. Close friendly relation, familiarity threat. Which two threats to independence are raised by this relationship and what safeguard should be applied? Familiarity and self-interest. Jones and company resign as auditor. No, we need to change the auditor, rotate the auditor rather than resigning as auditor, mean leaving the client. Rotation of audit engagement partner, and there is a self-review threat. No, D, familiarity and self-interest. And rotation of audit engagement partner means this partner should not be part of the audit team. Number 18, in relation to the audit team being offered a 10% discount on mobile phone, indicate whether the following statements are true or false in accordance with ACCA Codes of Ethics and Conduct. The audit team can accept the discount as it is on the same term as the offer to the staff. No, company can offer to their staff, but not to the auditor. Junior members of the audit team are allowed to accept the discount, but the audit manager and audit engagement partner should not. No, nobody should accept, even junior should not accept because they are involved in performing procedures. Use unless the value of the discount is trivial, unimportant, insignificant, and inconsequential to the audit team members and cannot affect the work, the offer should be declined. The audit team is only allowed to accept a discount of up to 5%. This one is true. Remaining false. Number 19, which of the following steps must Jones and Company as the fee from LV phone exceed 15% for the last 2 years? Should follow. Resign from the audit. Disclose the matter to those charged with governance. Arrange for a pre or post issuance review. I mean, if a fee from that client is exceeded 15% for last 2 years, what they need to do, resign from the audit.
What is PM post?
Mean before starting the work, they need to review the work of audit, means second partner review of working paper should perform. And after completing the audit, they should also perform review of working paper. And disclose the matter to those charged with the governance as well, so that they should be aware this is the issue. And if they allow, there is no issue. So 2 and 3 are right. In very extreme cases, we will resign. Resigning means we are losing our income. We are auditor. We need to make money. If we are losing our client, how will we make money? We should not be that much honest with the profession. Realities are different.
The class is still 9. Just to confirm, the class is still 9.
Yeah. 20, the finance director of LV has made some inquiries about the other services that Jones and Company may be able to assist with. like secondment of staff or other. In the table below, indicate whether Jones and Company would or would not be able to provide the other services. Design and implementation of IT system over financial reporting. Can we provide these services? If we are designing the financial reporting system, whether computerized system, we need to audit that. Will we audit properly? No, we are aware it is designed by us, so not we. Assistance with the preparation of tax return? No. Accounting services? No. Recruiting a service for position of credit controller? Yes, that we can provide, but again through Chinese walls. There is another scenario. Out of this question 21, 22, 23, you need to complete by yourself. This is your homework. Me next question 21, 22, 23, you need to complete by yourself. See you in next class with the remaining part of chapter 5. There is small part left. And we will start the very important and very technical topic of audit, that is audit risk. That is the most technical topic of. See you next class.
Okay, sir. Thank you.